Hi everybody, and hopefully you can see my screen. Just move the chat box out of the way. Drop that down there. There we go. And I've even remembered to switch my microphone on, so hopefully you're all hearing me. Brilliant. It's always a big effort. Very warm welcome. Good to see you. I've started actually with the, this is what I call the majors matrix. It's just a very simple arrangement of all the, or not all, but certainly 6 of the major currency pairs, all on one workspace. Several reasons for it, primarily because at the moment it's the dollar in focus. There's been a lot of selling of dollar overnight, and it's now, as you can see over here, we're on the, what are we on here? 3 minute. Okay, we're on the 3 minute time frame on the CSI. Just pull that over a bit. There we go. That's where we are at the moment in terms of all the currencies themselves. So the dollar's been selling off. The nice thing with Ninja, which you don't get on MT45, is that you do actually get your local time is printed in real time. In other words, this area, this time here is 8 o'clock UK time, so we don't have to hunt around and try and figure out, as you do on MT45, allowing for the 2-hour lag or the lead in terms of what is going on at particular times of the day. So we know for a fact we're into the London Open. It's 11 minutes past 8, so we're 11 minutes in. You can see here the sharp reversal we've had in the pound. So the British pound is rising. So, you know, it's no surprise to see this rising quite rapidly. What we've also got, however, is a big volatility trigger on that particular candle. And the expectation of that is either a reversal, which would be no surprise given that we're in the London session, or at the very least congestion. What we're seeing at the moment here is congestion. The trend monitor is still blue in terms of uptrend. We're also moving into, you can see here, we've got a low volume node here. So in terms of volume, it's going to take a lot less effort to drive that particular pair through that region. Volume's building all the time. You can see how rapidly we went through here. This was low volume. We're back into a low volume area here. So if this is going to carry on, it's not going to take as much effort to break through this area, for example, or to break away from this region. It should take much less effort to move the currency pair that much higher. What I've also got running at the bottom here, obviously I've got volume. And whenever you get a volatility trigger, this triggers in real time. The beauty of this indicator is you don't have to wait till the candle closes. It will trigger in real time. In other words, once the price action has moved outside the average true range, which is how the indicator works, then the little purple arrows top and bottom will actually trigger and give you that information straight away before the candle has actually closed. Now, when you're on a fast time frame of 1 minute, 2 minute, 15 second, whatever it is, it's not so critical. But if you're on a, and use it cautiously, slower time frame, such as a 3 minute, 5 minute, 10 minute, whatever, it is important, because if you're waiting 5 or 10 minutes for that information, but you actually get it in maybe 1 or 2, that gives you a heads up, the fact that, first of all, you've got volatility, and second, you've got the market makers are actually participating. They're involved in the move because you're seeing the volume building in real time as well. Down at the bottom here, I've got the tick speedometer running, which runs on Ninja. And basically what that is telling me is it's telling me about activity and participation. In other words, when it's running in green, you get these, you can see it over here, green and orange. That's really what we want to be seeing a lot of the time, because that tells us we've got high activity, high participation, and therefore we expect the price action to move. Where you get these red areas, that is where you expect to see volume falling away. You expect to see price spreads narrow. You expect to see congestion, and so on and so forth. So it's a great way of using the indicator in a different way. Obviously, we developed it for giving us the tick chart settings, which you can see over here. So if I was trading on tick right now on a 5 minute time frame, my tick charts would be set to either 610 or 666, which is an interesting number in itself, but we won't go into that one. And that's a powerful application. That's the reason we developed it. It gives us the tick speeds for the tick charts, which otherwise you have to guess, which is nonsense. In addition to that, it also allows you to blend trading on a tick chart with an analysis of volume. So you have a time-based chart alongside your tick chart, so you have the best of both worlds. In other words, you can apply volume price analysis, but you're also trading on a non-time-based chart, which reveals momentum. But in this application of it, I've got it running on the bottom of a time-based chart, purely to give me a visual on the activity that is going on in the market right now, and whether it's whether we get bursts of activity which change it to green, whether we've got average, if you like, the norm, if you will, of the orange, and then you move into these punctuations of red where we're seeing low activity build. And what we've got right now is we've got an effort to rally. We've got a wick to the top side. We've got decent volume under there, hardly looks strong, and it's really reflecting what was triggered in this volatility candle. In other words, expect either a reversal or expect congestion, one or the other. And I've said many times before, if you've got a decent position, maybe you've got in lower down here, you've got in on the breakaway, you've ramped up here, the market's moved very quickly in your direction. To be perfectly honest, you've got the decision to make. It's really a no-brainer. The only decision is if you're scaling out. If you've got multiple positions, take most of them off and leave maybe a couple to run. If you've got 5, take off 3 or 4. If you're trading one lot, close it out, take your profit and shut the door and bank it. Because what have you lost? If it's congestion, it's painful. It may well continue in the same direction for you, in which case you can jump back in. But if this reverses, as it's looking as though it's likely to, that's it. You've banked your profit, you're home and dry, you're just waiting for the next move to develop. It's as simple as that. So what we're seeing right now is no great surprise, because if we look over on the CSI, the dollar has been very oversold. It's been flip-flopping around in this region. We've had this very strong rally, but bear in mind this is the London Open, and therefore what you expect to see is participation from the market makers in here. It's a hugely profitable time for them, because most traders are unaware of the fact that that is what they're doing. They're going to manipulate prices. You can see it going on everywhere. If we flip up the Aussie dollar here, massive injection of volume. It's what we want to see. That's the London Open, big wick to the upper body, confirmed again with this one. And now we're going to come back to where probably down to here. We've got a very strong platform of price-based support. We've also got the volume point of control. These are all 5-minute charts. So we've got the volume point of control here, which is the heaviest concentration of volume. And we've got another layer underneath here of potential price support. So in terms of where this is going back to, in all probability, it's going to head back down here. And at that point, we expect it's either going to be held here, or if it breaks through there, it's going to get down to here. And at that point, you expect to see further congestion build. Why? 2 reasons. Firstly, because that is where the volume point of control sits, and that is the fulcrum of the market. It is the axis of equilibrium. In other words, it's like a seesaw, which analogy I've used many times before as well, where you have 2 people of equal weight and the seesaw doesn't move out of equilibrium. As soon as one of those people gets off and a heavier or lighter person gets on the other side, obviously it will move. And that is the principle of the volume point of control, because at the volume point of control, price is in agreement. In other words, there's no particular bias to the bullish or bearish side, and therefore the market sits there. In addition to that, it then builds this big volume area, which is the heaviest concentration of volume. And then once the market breaks away, then you're using the volume point of control and the histogram particularly in a different way. So if the market was going to break to the downside here, first of all, we'd be looking at the potential price levels that are going to come into play. These thicker ones are very strong. You can see it literally coming into play as I'm talking. It's on the accumulation distribution indicator, and the way the indicator works is to build these levels for you visually. In other words, the thickness of the line is recalibrated all the time depending on how often these are hit. So every time this is hit and holds, then it paints a thicker line, and it gets ever thicker and thicker. So you get a straight visual, very simple but very powerful visual on the support regions and resistance areas from a price-based perspective in terms of their importance, because they are thicker. These ones down here are less important. You've also got a little digit over here. You probably can't see it. This is a 1, this is a 1. Up and down, up to 6, 8, 10, whatever they may be. And they are giving those regions. Now, once the market breaks away, assuming it breaks away to the downside, if it did, then you're looking at the histogram here in terms of volume. And these low volume regions are key, because once you get down to them, as I said up at the top here, if we broke to the upside, what you're looking at is as price approaches these from a trading perspective, you are expecting the price to move through there rapidly, because there's nothing in the way of volume to actually support the price. And even more so in terms from a price-based perspective, because once you've broken through this minor, what would be support here, it obviously becomes resistance. You can see it here acting as support, but it then becomes resistance in a downside move. And it's a combination of using price and volume from a support and resistance perspective, which is so important. And a lot of people, we're all familiar with using price, but less so with using volume in the same way, but it is equally powerful. Let's just pop that down and see what's going on. Okay, we've now got the pound kicking over. We've got the dollar rising. And the other nice thing about using having a majors matrix in this way, where you're looking, really you're focusing on one currency, it's really about the dollar, this matrix. You also get the inverse perspective from a volume point of view, and also from an indicator point of view. Because when you look at pairs like the dollar CAD, and this is something that I do myself personally all the time, because I have a bias to the downside, I always have done, it's something I'm aware of. I prefer trading short to trading long. It's just something that I've had for years. I'm quite comfortable with it. You may have the same or you may not. The reason I have a bias in that direction is because markets normally, not always, but 98 times in 100, they will move much faster to the downside than they ever do to the upside. And so if you have that bias, you will generally find that you make money a lot quicker. You will also find, of course, the inverse of that, you will lose money a lot quicker. So as everything in trading, there is no panacea, there is no perfect way to trade. You have to find what you're comfortable with. And if you have a flaw in your trading, be aware of it. I'm aware of the one in mine, and that's it. So the point I was going to make is this, that when you have a majors matrix like this and you're seeing selling in the dollar, well, you have two ways to approach it. You can either trade long in these pairs, in pound, Aussie, euro, where the dollar is the counter currency, or alternatively, you can look towards currency pairs where the dollar is the primary currency, like the dollar CAD and the dollar Swiss. So if you have a bias in that way and you're more comfortable trading short, then you will tend to migrate towards the dollar Swiss or the dollar CAD in that scenario. The other point I would make about it is this, that when you're looking at the CSI, it also gives you a great visual in terms of which currency pairs to focus on, but also more importantly, which ones to ignore. Now, when you're looking at the dollar Swiss, for example, here, and you might be thinking, well, why is this in congestion all the time? Well, the dollar is rising, as is the Swiss franc. So when you've got the two rising as they are, pretty much at the same speed, I mean, they're both climbing. So there's strong buying in both. This pair down here is not going to move very much because there's no differential momentum between those two currencies. And as Anna said, what you're looking for the whole time is you are looking for this. You are looking for strong selling in one, strong buying in another, because that will give you the strongest momentum in the move. And everything else, whether you've got currencies flip-flopping around in the middle here, doing this all the time, whether you've got them moving together as we've got the dollar Swiss, we've got the dollar yen here. I haven't got the dollar yen up here, but rest assured, that would be in congestion as well. What you're looking for the whole time is you're looking for momentum driven through not asymmetrical, but perfect symmetry of buying and selling of the two currencies on either side. And when you go to other markets, such as the currency futures, for example, there you've got the dollar, which is everything is quoted against the dollar. I'll pull that up in a moment. But where it's quoted against the dollar, then it's all on the same side. Yep, I'm just going to pass back to Anna, pause and pass back to Anna.